Hi everybody, Sean Kelly here. Hope you guys are doing great out there. I want to talk about the silver tsunami that is coming crashing onto our housing shores all over the country. What's going on is over 4 million people a year are turning 65 plus. And they think that in the next 10 years, the next decade, close to 20% of all Americans, that's about 80 million people, are going to be 65 or older. Now, how does that affect us and the housing market? Well, one thing that there should be some changes going on. As people retire, they may sell their houses and move somewhere else. So that should be good for the market in general. But how about those people that want to actually stay in their house, and how do they accomplish that? Well, there's some great products out there, and the one that you hear about most often is a reverse mortgage. So the reverse mortgage works like this. You have equity in your house, and you put a mortgage on it, but instead of you paying the mortgage every month, the mortgage pays you every month. You either take it out on a monthly basis, or you get a lump sum amount of money, or it's an equity line that you use over time. So it reverses the trend of basically paying down your mortgage. You're actually taking money out of the house. So that's basically what it is. Now, there's a couple tenets. I want to go over 4 basic things about reverses. Number 1, you have to be 62 years of age or older to qualify. Now, it works way better if you're older than 62. It seems like most reverses that I've done, people have been between 75 and 80 or even 95. I've done a couple where people are quite old. So the numbers work a lot better because it's almost like an insurance policy underwriting. It takes a look at like how long you expect to live, and based upon that amount of time is the amount of money you get. The younger you are, the less amount of money you get. The older you are, the more amount of money you get. So again, in general, older is better when you're trying to do these reverse products. The second thing is you can do both a refinance or a purchase. Most people think of reverses as you've got a house, you want to stay there, you take out money, it's called a refinance. But you can do it also as a purchase. We've seen this where someone has a home, they sell, they have a chunk of equity that comes out, and then what they want to do is buy another house, say in a less expensive market. Well, instead of taking all that money that you've got and putting it into the next house, take all that money you have, put it into an investment program, and then use the reverse for your down payment on the next, property. So that's another way to use it. You can both do a purchase or a refi. The third thing to know about is there's no income or necessarily credit limits for doing these loans. So really, you just need to be 62 years old and you have to have actually equity in your house. Okay, so does that mean we don't look at income? Well, we do kind of look at income. We want to make sure you've got enough money to pay for the taxes, the insurance, and the upkeep on the property. So there's a minimal amount of income that you need. Now, you can still do a project, you can still do a reverse, but it just means you're going to get less money. And then the last thing, the fourth item, is the reverse is a great product, but it's not a silver bullet. It's not for everybody. A lot of people that have other sources of assets and other sources of income, probably the reverse is not the product you want to use. For example, if you're living in a home and you've got a big investment account, use some of that investment account to supplement, not the equity in the house. If you've got family members that are willing to come and help support you and they're going to end up with the property, that's probably, again, a better financial move. But for those people that truly the major asset they have is the equity in their home, and they want to live there long term, and they have limited income, it's a great product. And so reach out to me, let me help you look at all the options here and come up with a program that's really going to work for you. Sean Kelly here with the Reverse Mortgage Minute, signing out.